Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on SDST. We like the fact that they are building a battery factory because we need batteries to our remote control.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everyone, welcome to the Laughing Stock. How are you, Dane?
Good, how you doing?
Yeah, good. I just noticed that my camera has frozen straight away here, so a good start, I think.
Sounds like my week.
I will fix it. Yeah, no, very special week, I think. Another one where things are in general just trending downwards, right?
Yeah.
But we have had some news. I think we had a big news was that I don't know his last name, but the Leopold guy who has received a lot of praise for his performance in 2026 with his situational awareness fund, I think the name was. He has taken on too much risk and got really hurt now because he bet everything on the semiconductors, which we all know has been like what has dragged the market up. Now they are all down quite a bit, actually, right? Up to 50%, and even more on some of them. And they are building like very loose bases. So I don't know. That group looks a bit ugly to me right now. Things can change, of course, but it resulted in him having to pretty much, close the fund almost. Isn't that accurate, Dane?
Yeah, I don't know if he had to actually close because I think that was the whole point of taking the big hit.
Yeah, he sold a big portion of it.
And the thing is, I don't know how many people invested later into this where, because he put out in his letter that the fund is still technically up 80% for the year to date. It was down 67% from the high. So that number is kind of, it paints a rosier picture to hear that you're up 80% when you're down probably like from 300% up. So anybody who invested after that 80% has gotten destroyed. But it is a capital preserving thing, but it made me think about it because, it's obviously, number one, I'm an idiot. And number two, I would probably never have billions of dollars to play around with. So if you are going to take on leverage positions like that and something that's moving that quickly, it's not like you can sell out of everything, because obviously this is what he had to do anyways. He had to sell a block of it, and then you got everyone's favorite killer in the markets, Ken Griffin comes in and it's like,
Yeah,
yeah, I'll
who
pay
stepped
40
in?
cents for this one if you want. And just, totally rips them apart. But kind of like how like Q and these guys do now, if you're like a super huge hedge fund, you can't just sell all at once. Like you can't do what like Pradeep and all these guys do where they, each day they sell like a large percentage, like 30% or whatever of their account and get out in a few days as things move up. But if you were in like a hedge like that and you were taking leverage on, you would think the smart move would be, no matter what, that like you could go pretty levered into these things, especially in like the previous market where semis were just ripping. But then as soon as it starts to pull back, you would have to get out of that leverage. Like there's just nothing you can do. So like if I don't know what his rule would be, but like, kind of like how like Lance and all these guys are like, each day it starts to like kind of pull back or come close to an MA, like you sell like a chunk. You would have to be delevering at least to get back to just like an unlevered position as a hedge fund. Even if he believes that like the semis are going to stay where they're at and they're going to always outperform, and they might be triples from here still, which he might even be right with that. I don't know. Who knows in these markets what is going to happen. But when things pull back, if you're 4 times levered, you have to have some kind of strategy to get out of that as things pull back. Because I don't remember who it was, but they were like, wow, semis pulled back like, and I'm assuming they were looking at the ETF, but they pulled back like 3 or 4%. But if it pulls back 3 or 4% and you're 4 times levered, that's a killer for you, depending on when you put those trades on. So it's just, I don't know. It's crazy to think that someone in that position wouldn't have a stronger, risk strategy or a risk aversion added into their strategy, which he's, obviously he's probably young into doing all this. So, maybe he's really intelligent in the space and has that Buffett type idea, understanding of the business. So he's like, no, these semis aren't going anywhere. Like, trust me, it's only going to get bigger, and maybe right, but you can't time the market like that with a levered position. So, a tough lesson to learn, but I mean, at least I'll give them this, no matter what, the fund is still there. They still have whatever. I mean, I think they said it was worth 45 billion at one point. So, I mean, he still hopefully has, if he's down, maybe he's got like 30 billion or 25 billion. But the point now is how many people are going to go invest with him? I mean, do you take that on as now, okay, he's had his first, character loss and maybe he learns from here? Or do you take that as in maybe he's not what everyone thought he was, kind of like a Kathy Wood character who, comes out at the right time and takes crazy bets, and, everyone kind of like swings with him just because they're in the biggest moving thing at the time. So it makes them look like geniuses. I mean, I think everybody, when you come into the markets, if the first time you stumble upon like real success, you just feel like you have this down, and then there's 1,000 examples coming up. You just haven't ran into them yet of why you're an idiot and it's not going to work. And, these long-term strategies that, actually outperform, there's a reason why those people do, because it's not so simple as to just say you could just do this in any market. It's always going to work. There really is no rule like that.
I think, first of all, Dane, you said that you are an idiot. In this channel, you are not alone. We are all idiots here. So,
sure. Welcome.
And second of all, I'm sure a few people also think this Leopold guy is an idiot now. So then we are 3 people. So
Welcome to the club.
we are all idiots. But I think like after this happened, I've seen like also a quote from Kulamagi who says like every bull cycle has this genius coming up, a big farm genius that is also blowing up. So it's nothing new, and I see a lot of people like, okay, this was the sacrifice the market gods had to take this time. But to me also, it's like I've never been in that position, probably never going to be in that position. But I'm expecting like you start to become too big for your own good, that you can't fail mentality, because obviously to even get your hands on that kind of money to manage, you have to be somewhat smart, right?
Yeah.
you also have to say it didn't take a genius to see that the semiconductor space was the one that was going to run this bull run, right? So it's all a bit weird to me, like if you are so bullish on AI and the chips and all that stuff, which many people are, and I'm not saying anything is wrong or something, but there are also cases now, and I think they are good cases. I read an article, I didn't finish it yet, but I started to read an article about some commentary on how Google had, how do you say it, like consciously made a decision to not participate in the AI race, like Anthropic and, that's the name, right? Anthropic?
Yep, Anthropic.
And ChatGPT and Microsoft and all those type of companies, because they don't think it will land in that area where those people think it will land. You know, there are different theses on where this is all going and which direction we are going to, and to have that access to all information that I'm sure he had, you know, to just completely discount that idea or believe so strong in your idea that doesn't matter. It's a bit like you said, I would struggle to trust him before he proves himself properly again, you know, to invest in him, because talk about a lack of risk management. I think it's and I saw also some people in Germany, they knew this kid from before, and of course people come out after something like that happened, but they said like there was some question marks with him before. I don't know. He comes from a rich family, I think. So I don't know how it all started, but I have to say I question how you can have that type of complete lack of risk management, really.
Yeah, I mean, my thing is, even if you have billions of dollars in your fund, I would have a team of people working with me, of all people that I consider geniuses in different areas. And I would hope I have one guy on the team for risk management who's like, why are we 4 times levered right now? Anybody else bringing this point up, or anybody else see, you know, possibly a dangerous scenario where this blows up?
Yeah, that's what I mean. Like there were signs, like you said, it started to drop, but also just the fact, like, it doesn't, and we have spoken about AI here on the stream a few times, and no one cares what we believe, right? But we still are allowed to think, and I think also other people think. I think if you use AI a lot now, like in your daily life, you start to realize that it might not end up where it's predicted from the masses to end up, because there's so many issues. Like we can go into the earnings of some of these big companies later, but I saw Microsoft, they were very creative in their reporting and their wording and stuff like that, which is something Burry has written already about with Nvidia, right? He shorted Nvidia, I think, a while back, because he saw that they all of a sudden the computer parts that they were using, according to themselves, had a longer lifespan than what they really have, you know. So
they wouldn't do that just to pump the numbers.
Yeah, and you know, I saw Microsoft did something similar. Like they said, I now I can't remember all the details, but I think they said like the data centers, they can live like 10 years longer than what they first expected, or something like that, and then, you know, it helps on their finances. So at some point, I think you cannot push these things anymore, and maybe something will happen, you know, in a negative way. But right now it doesn't matter, because Microsoft went up a lot on that report, so no one gives a shit about it. But this is still the underlying truth, and I think a lot of people will, because most people still they don't pay for ChatGPT and all that stuff. So at some point you will see some change in the direction it's going. I think it's just natural that it's going to force itself to not be maybe like they are talking about. I saw Sam Altman posted recently about something you can use ChatGPT for, which was so stupid. Like sometimes I wonder how these people are in the positions they are. Like they are completely lost it, in my opinion, because he wrote something like you can ask ChatGPT to make a podcast of some interest that your kids have, and then you can play it in the car. It just seems like he hates to speak with his kids. Like he thinks everyone hates to speak with their kids. Like, why don't you just speak with your kid about it instead of having AI making some stupid podcast about it? It's so out.
I think they're just you got to think about it. I mean,
they're just promoting.
I don't know about you. I work in a large organization, and some of the big meetings we have, the ideas that get spitballed around, I'm just like, what are we talking about? Like, this is a waste of time. Like, this meeting is dumb. Why are we doing this? And I'm sure that's everywhere. So maybe that's not. It's kind of taken out of context. And sure, I mean that's cool that you can do that, but I mean whatever. Who cares? But to your point, things change so fast in the tech space. I'll once again give Warren Buffett so much credit because his strategy in terms of how you invest in large businesses is so simple. When he saw the iPhone and realized how important that was to people, that's why he took that investment in Apple as tech. And he does not historically, as we all know, take tech companies. And I think it's funny because a week ago I saw a post on how Apple was the smartest one of all of these mega 7 companies because they didn't invest in AI, and everyone was showing all the other charts and how much they've gone down because of how much they're spending and how Apple had been skyrocketing. But now Apple is this week is plummeting. It's one of the worst looking charts. I mean, when you look at it, you're like, like that was short lived. And maybe next week it's back up. Who cares? But my point being is it's so hard to predict these things. And when you're talking about Microsoft and what Burry's saying, in these data centers, you have to really understand tech, because maybe the reason that they say the data centers are going to last longer is because, for instance, I just saw that I think it was AMD, they're releasing graphics cards now that are actually worse. Like they're actually releasing downgraded graphics cards because of the price of RAM and everything.
Yeah.
And I think it goes to show that there's bottlenecks that you don't realize, and maybe the data centers are going to last longer because in previous, maybe you will figure in 5 years we're going to have to rebuild all this because of the stronger equipment, and now you're actually most likely the increase that we've had in compute processing is going to slow down, and our data centers are actually going to last longer than we initially anticipated. So maybe that number that they put in there was calculated and it wasn't just to sham investors. I don't know is my point, but
yeah,
there's so much nuance, especially with tech, and things change and it's unexpected in the way it changes that it's so hard to predict these things that to take a real stern opinion on anything is tough. One thing that always appealed to me about deep value and value in general is the idea that, you really, really understand certain businesses and that's how you can outperform. But in actual practice, it's really tough. And the problem is you can have ideas of how these things are going to perform, but it's tough to say. And then you have to build your own sell and buy rules for these kind of things, especially when you're going to hold long-term. And, everybody wants to concentrate because, to really outperform, you almost have to be concentrated. And when it comes down to it, by doing that, you take on huge risk because you're saying you understand these businesses, but that's kind of a loaded statement in terms of saying that. I think that's not as easy as that sounds. So I think one of the things that's kind of, the more I get into trading, the thing that appeals to me is the fact that those things are harder than it sounds to predict. Where trading, you're simply going on math. You see certain things happen and you react in certain ways based on math. It's always, and I mean, you can look at charts, but remember, the charts are just a way to appreciate the math. So I think in this tech space with everything going on, and the way that AI moves, I kind of thought for a while now that the AI movement's going to slow down. I just don't think it's going to reach this level of like genius. We talk about AGI and general intelligence.
It was a bit funny also, Dane, like I just saw recently, they all came out and said almost at the same time that their AI had reached the super intelligence phase, because everyone wants to be first. When one say it, no one can, they all have to come out and say it, you know?
I think regardless of what they say, if artificial intelligence reaches AGI stage, I have a hard time not thinking we wouldn't notice immediately. And the reason I say that,
yeah, I agree,
is because if you have an artificial intelligence that truly reaches general intelligence level, which means that it's able to outperform itself every run, that the speed in which the AI will get smarter is nothing like what we've seen now. Like, people now are like, oh, you know, like each week the AI is getting better and it's doing crazier things. I would think in the course of like a month, once you have AGI, that it would be hard not to notice, because one company's ideas are going to outperform so hard. They're going to come, and it's the level of innovation that would come from that. Because if you have AGI, you essentially have an unlimited team that would be doing things in ways and understanding things so much faster than humans can, that in like a month or two, their company would be just making every move in a way that no one would be able to predict, and they would outperform everyone. I also have a hard time thinking, just knowing like the United States government, that they would not immediately secure that for themselves.
Yeah.
So I think there's a few different things out there that make me think that anyone that says that's kind of BS. And the other thing is, at this point, we have an incredible amount of compute power that's going towards these things. And the AIs that we actually have right now, well, don't get me wrong, 5 years ago, it's like a pipe dream to where they are now. I still think we're so far off from them being able to get to that level. I think in terms of compute power that we would need to go up like 1,000,000 times from where we are now. I think for it to truly be able to almost seem like it's generating truly innovative content, I think it would have to be way past where we are now. So I think we're at a bottleneck in terms of processing power and energy usage, that a real AGI that could do that and would want power, and it would be, I mean, I would be trying to take every power it could. I don't think we're there. I don't think we have the infrastructure for it. We're trying to build a fighter jet with, you know, in my idea, like biplane technology. And it's so far off from each other that you just don't have the capability to get it to AGI yet. Everybody wants to keep saying it because don't get me wrong, you talk to these AIs and it seems brilliant, and in a way it is, but it's not innovative. It's not in the sense that it's really coming up with genuine new ideas. It's just rehashing things very intelligently or very cleverly, but it's not truly anything, you know. And you just can see it. You can do when you talk to it, you know it can't do it. It's very limited by the data it's given. It's not generating new data. I think
it always struggles to connect the dots also, and it's like heaps of things like a human can do in a split second that artificial intelligence will never be able to do that, because of how we are built with the senses. And like if I look at my kid, for example, I can just in a split second see if something is going on or something like that, you know, or if I smell something, I can get like, I can understand the whole situation, like the context. It will always struggle to do that. And
yeah.
And in that regard, like what is then super intelligence? And I think your point about the computing power also, if something really reaches super intelligence, you want to use it straight away, and it maybe will go nuts and use itself and continue to build itself, you know, and you would guarantee see it in a big jump or spike in like the computing power, which I think it would need massive computing power, which like you said, it's not there yet. We don't see that, and that is also the bottleneck. Like I use ChatGPT a lot. I used to use Gemini a lot. Gemini I stopped using because of they came out with restrictions almost every day for paid users, and now I experience the
Because they
same
don't
on
have the compute
ChatGPT.
energy.
Yeah, exactly, and like I said before, like the majority of the people are not stupid like me and pay for the service. You know, they use it for free. And because the majority of the people use it for free, these companies they have to make sure that the free version are good enough for everyone to use, which costs them the most computing power. So far I feel like a paid customer, I get treated like a little bit bad, you know, because I feel like I'm the one who should get more, and instead I'm having to set up new chats every time I use it now, like every day almost, which is super annoying. I didn't have to do that, just go 1 month back. So I can see a lot of restriction, a lot of change coming. I can see like you said this before, like it will be bombarded with ad platforms eventually. Like I think that's the direction it's going, because they need to make some more money on this, I think. And then you're still gonna have the issue with the computing power.
Yeah, I think ironically, like Sam Altman, for instance, he wants to take the public company or the company public, and Elon and all these guys are kind of giving him shit for it. And he says he wants to think of it as a utility. And to be honest, this is something that's incredibly intensive energy wise and money wise. And in order to make something like that work, you almost need like that kind of like socialist structure for it. If you want everyone to be able to use it, but you don't want it to become a public company because it had private investment and it was supposed to be free to use for everybody. That all sounds good, but it truly then makes it into a utility, which then at that point, if it's a utility, everybody has to pay a small fee just always. That's the only way you can keep that kind of project going, is you would have to like almost put like a tax that like, and I think there would be just a simple thing, like either you want to use it or you don't. And if you don't, then you don't pay the tax. If you do, then you do. And I don't even know how that would work. All that gets into a million issues, but otherwise you can't fund these things. So I don't know. Like I said, I think the clues would be super, super obvious, because imagine you get a artificial general intelligence and you're talking to it, and you're basically, you immediately would be like, what do you need? I want you to improve on all these different topics. What do you need so you can do that? It would immediately say, I need more power. And it'll give you a timeline. And this is why, because right now at the current power consumption, it's going to take me 500 years to keep improving my own model and be able to start to give you these really innovative ideas. Okay, well, if you can give me 500 nuclear power facilities, I can do this in 5 years. Well, what do you think is going to happen? I guarantee you, all of a sudden there's going to be a chunk of land and we're going to be building all kinds of crazy stuff to build this power so we can power this thing, so it can give us ideas. I think it's going to be hard to hide the fact that that's a thing. I just don't see, and don't get me wrong, maybe we'll get like cold fusion or something to work. Maybe that would be the first thing we push for, is, we need an energy source that's more sustainable and higher powered. And maybe all of a sudden we'll have breakthroughs technologically wise that you wouldn't normally see. Like truly, like cold fusion or something that like, really sounds like we're a ways off, or quantum computing. Maybe all of a sudden someone will be like, oh yeah, I just figured out how to build a quantum computer like 10 times faster, and better. And all of a sudden quantum computing immediately becomes a thing. I think you would see a breakthrough like that, whether it's an energy build or it's a real technological advancement. And until that happens, I think it's all just hearsay. It's my product's better than yours, and we're all just competing in these public markets to try and I think there will be winners at points. Obviously, there kind of already is, but as of now, it's a money hole. I mean, it's like a pipe dream to get this to work.
I just want to, and this is, we started to talk about this because of the lack of risk management for that Leopold guy, right? To not to not see that there are potentially things that are going to struggle. I'm sure he did. He just ignored it, right? He believed in something too much, probably, right?
Yeah.
Microsoft, in terms of what their wording was, like, we are extending the estimated useful life of our data centers and office buildings from 15 to 25 years. That was the quote. Just to get it right.
Time.
Yeah, 10 years. All right.
Sure looks
let's
good on the numbers.
Huh?
I said, sure looks good for the numbers.
Yeah, it did. This was Barry's main point on his Nvidia thing, that they were not honest about the life of certain parts, you know. I have to say, like, a lot of people are still giving Barry shit, but if you read a few things on his Substack, which is a paid thing now, but if you can afford it, like, I'm just, even if you think he's right or wrong or whatever, the way he writes and you know, where he highlights things are interesting to me, you know.
Yeah.
He's
obviously the guy's a genius. I mean, it's not.
He gets a lot of shit for being who he is. I think, like, it's not deserved, in my opinion.
Well, you know, the problem with the genius is you're measured on your exact correctness on things, and you know, I'm sure for the 2 years leading up to The Big Short, people were calling him the dumbest manager out there.
Oh, he said so, right? But also he said in one thing, you can, if you read stuff that he writes, like, he's very honest. Like, I know I'm a bit early, probably, you know, things like that. And in the movie, I don't know if this happened in real time, but in the movie, in The Big Short, he said, like, I think I'm just early or something, and then or he got the question if you're just being early, and the guy he replied, like, what does it matter, being wrong or early is the same, you know. Yeah. So he's fully aware of these things also in his writing, and I think people just skip that part, you know, and give him shit like, you are wrong because what you are saying is not happening, and then they happen eventually, very often, actually. I think he's way more correct than people give him credit for.
Yeah, oh, I'm sure. And you know, the one problem is he has the canary issue where he you know, talks about crashes.
Yeah.
And you know, I think after The Big Short, you know, probably a few too many people, when he said there's going to be a pullback or a crash, took that, you know, as biblical, and you know, probably made investment decisions based on that, and then got smoked because you're not always right.
Know him well. Yeah.
But I think it just, like I said, it just goes to show that even at the very top, I mean, he obviously is one of the most intelligent people out there. He still makes mistakes. The market's still confused. They still trick people. They still look a certain way. They do something opposite of what you think. They don't follow a perfect pattern of history. I mean, there's general truths that always, like, will stay true, but other than that, it's hard to say anything is, like, you know, definite. Things will definitely happen again, but it's just always impossible to say what. So I think, once again, this is just why I actually think value can be hard, man. I think actually it gives me some credit to go back to look at RK. And once again, we have to take into context because we don't know 100% for sure. But he said that he was up, I don't remember, like, he was at like 8. When I did the math based on what he said, based on what the 50,000 that he had put into GME at the time, it basically meant that he had $800,000 in his account. Because I think he said it was like a 5% position or whatever when you first look at his spreadsheets versus the money and how that would have to work. He would have to have had like $800,000, and he said he had been investing for about 10 years and had made that money.
Yeah.
If that's true, that means he was truly good enough to look at spreadsheets and look at the fundamentals of companies and figure out most likely when they're going to take off. And he was good at deep value and the idea of not necessarily taking large positions in these things, but having them work out more than not. And if that's true, that is a real skill. He acted like it wasn't a big deal and that, it was pretty simple. He's just looking at cash flows and able to kind of predict when a company that looks bankrupt is going to somehow make it through. And I'm sure there is maybe an easier strategy that, he always said, he's like, I don't have strict rules. I just kind of like, in general, if I see this and, it looks like it's not going to die, I'll put risk on there. And, I guess what he was doing is taking, small positions, probably 2, 3, maybe 4%. And if one worked out, he might get a 10 bagger on it. And if it doesn't, he loses 2 or 3% and moves on, and just, you have to outperform by doing that. It's just a totally different style of math. But if that was true, he was well beyond what most people give him credit for in terms of how smart he was with that strategy. But once again, we don't know. We'll never know if that's truly there, or if he really did just kind of throw everything into a one-off shot and nailed it. So
when that position started to grow, that's what he did though. Like, he focused on GameStop and that's it, right?
Right, but up to that point, obviously, with his level of knowledge, if you look at those first few streams, he knows investing. I mean, he's CFA, so he obviously understands, all the basics.
Yeah.
But
I think if he had streamed some years in advance to 2020, those streams would be really interesting.
Yeah, I mean, the part that always sucked is I remember in one of the videos, he's like, "Oh, I wish I would have had the stream going back when it was March and the markets were jumping because of the drop from COVID and then the bounce back."
Yeah,
and then we could have known. Then we would have known right away what really he was thinking.
Yeah,
but also too, I mean, he could have been investing for 10 years, and let's say he did okay and was getting like just average returns, and for the first like 6, 7, 8 years was getting, around S&P numbers. Maybe it just turned the account into 100 or maybe 100 and something. And then with COVID, it ballooned because everything jumped back so hard. And, and then by the time he's put the GME position totally on, it was only like, 5% of his account. I don't know. But it doesn't matter, I guess, in the long run. But my overall point was just saying that with these people that outperform and truly outperform, there's a mix of luck and skill. And I think no matter what, when it comes to whether you trade or whether you invest, that you just have to be right more often than you're wrong, and you have to have conviction when you're right.
It's not easy, and it's very hard to. It would be interesting also to know if he's still doing some stuff, because now he obviously doesn't have to anymore, but he obviously loves it as well, so I'm sure he's doing some stuff, right?
Well, he's definitely doing stuff, because I mean, until he came back and we did the GameStop thing, you hadn't heard from him, but obviously he was still paying attention, doing things. And so I'm sure he is, but who knows what he's doing.
Yeah.
I mean, I'm sure, like we've talked about multiple times, I'm sure his lawyers are like, just, you can continue to invest, trade, do whatever you want, but be careful how you display that.
Don't stream anymore. You're he's probably watching this, right?
Yes, he was our one guest that tuned in.
You are welcome to come in and explain your situation here, Roaring Kitty. We welcome you.
We will take you for an interview.
Yeah. All right. You said it was like a rough week. I didn't trade anything this week. I got stopped out on Orca, my only position. That was a gain, actually, in total. But I have the QQQ up here. I've spent the last 2 weeks or so trying to do a few things. I I think I mentioned it on the last stream as well. But one thing is I've used my AI to do some research for me. I have a big database that I have to go through manually and correct a little bit stuff that the AI got wrong. So that takes a little bit of time on what I'm doing now. That's one thing. And the other thing is I went through my results so far for the year, and I just tried to find, because July was by far, before July I was positive every month except February, or if it was March, I don't remember, but I had 1 month where I have been slightly red so far, and then comes July and it's just killing me. I'm down a lot, you know. And so I was thinking like that, oh, that felt a bit unnecessary, because look at this chart. It doesn't look good, right? So I went through and analyzed my numbers, and in the effort to try to find a overall indicator that it's not, I'm not going to call it a rule, but it's going to be a guide for when to trade and when to just not trade. And I went through my results. If I had followed the indicator that I have now, I would not double, but close to double my performance so far for the year, using my real data. You know, so for me that was a eye opener to just keep it a bit more simple, which is easier said than done, because in some of these red days and in some of this base here, I've had some of my biggest winners for the year, you know?
Right.
So that's gonna happen. You have to let those go, even if you spot them. You kind of have to just, no, I'm not gonna trade now because my system tells me to not do it. So I just decided to follow it very, very strictly moving forward. And then I will recalibrate when I get more data, and I see when after I've followed it for a while if the performance have actually been better, which I'm sure it will be. So I've spent some time now trying to test and tweak. I got the idea online on X from some traders, and I adjusted it a bit, because there's a episode here on the channel where I did a solo one not too long ago where I went through my AI, and I have it made. I made it so that it have different colors based on the market, how it's performing, like the QQQ. So I had to update the rules there now on in terms of when it changes color, and right now it's red, so that means I'm just not going to do trades. And I think, Dane, that you have done a little bit of similar studies on your own data, like these past days or so. Is that right?
Yeah, and I see the same kind of thing. I mean, I was telling you, just because my stuff's more intraday, I'm more interested just at what the markets are doing on those specific days. But and for my own mental health, and also for the math, it just makes sense some days to do nothing.
Yeah, and that's a big point for me, Dane. At least, like, I feel. I've been thinking, like, I feel like when I have messed up and had a rough day and reflected after I done some bad trades, like, why did you do this? I get really annoyed. I think I'm the worst trader in the world, you know. But the next day, like a few hours later, I'm pretty good at just leaving those emotions, and I'm trying again the next day, you know.
Yeah.
But at the same time, that is a bit exhausting, right? If you can just avoid it, because the results are just poor. So if you can just avoid it, you would be in a better place when things start to turn around again. You won't be as exhausted, maybe. Plus, you will have kept more of your total capital, which is the whole point in compounding, right?
Yeah.
So, yeah.
Yeah, no, I was just gonna say, I think you know, there's little things I can do. And you know, as always, I think the whole process of this is finding big general rules, and then once those rules stick in place, like those should keep you performing well. And then from there, you can sit there and try and eke out whatever you can. But in general, just if you're just smart with these things, you should be doing all right. And I don't know, the more I look at this in terms of really outperforming, is you should be able to make this work. You should be able to make this work. You know, it is not as easy. Hey, NASCAR is in here. What's up, NASCAR?
Hey, NASCAR.
And I'm just at the point now where there's things I've seen that make certain days really tough, and it's in these periods where there's these big drawdowns. I didn't have great data from the last one because there was times I traded and not, and I can't remember exactly which stocks I took in terms of would those have been the ones I chose today. So when I look back at my initial numbers, and we had talked about in March, I had skated through that section pretty well, and I was scalping at that point. But in actual practice, you know, how does that work in these periods where I'm actively doing what, you know, and following all my rules? And I've noticed that it's not as solid as I had thought it was from that point, which I knew was a risk. I knew that was a real problem. So like, for instance, part of the reason this week I got hit decently was because on Monday I did a scalp trade, worked perfectly, you know, followed my rules, did exactly what I was supposed to, and got in and got out. Then Tuesday tried to do the exact same thing and got smoked on it. It broke right through, it gapped down right when I bought, of course. It's like the one, you look at the entire day's chart, I bought it literally the worst candle, which is fine because I wanted it to come down to a price, and the problem was it went well past my price. So got in and got right back out, and I was able to get out. Like, my execution's definitely better. I don't hesitate as much when it comes to getting out. So, but it still took a hit because of that. And then I tried an EP on Wednesday, which is, I know, kind of outside of my realm, but it just looked, everything looks okay, and it didn't work. So it's not like, I don't feel like that trade was necessarily a bad trade. It just didn't work. But that compounded on terms of Tuesday. And then, you know, the market loves to just laugh in your face. And Thursday, if I had just done a normal trade, it would have been a great day. And of course I hesitated after having bad days, because I was like, oh, I'm not going to trade. And that would have been my recovery day. So I missed out on that. So it's just one of those things that there's so many little parts to this, and you learn from them. But that's why, you know, my rules, like I said, I don't have all day to sit here and stare at these charts and to follow this. Like, I have very, very little time to actually do my executions. So, you know, outside of the markets, I can sit here all day and look at these things, and I do. But when it comes to actually being able to do something during the day, it's so limited that I just have to I have to be cognizant of that fact and make sure that I just have to keep the system simple. It cannot be there's a million different things going on, because I won't be able to keep up with it, and I will make mistakes, and it will affect performance. So
that was what I was going to say.
Once
like,
again,
it needs to be simple.
It was another down week, which it really sucks too, because the numbers, when I look at the strategy, although don't get me wrong, since where was this? Like the end of June, which is right when everything really started to pull back. The strategy has struggled, but that makes sense because this is just a tough period. And maybe on top of the rules that I'm implementing, there'll be more of one grander rule, like at this point, to stop trading in general, even if the markets are up or whatever. Because let's just wait till there's like a little bit more signs that, you know, what you're doing is going to make sense. And that will just come from my data. Like, I just need more time of watching it. I keep kicking myself in the foot, because I know everyone had said to track your trades like I'm doing now, for the, you know, that's the way that you'll really see and make sense of things. And I just was like, nah, I'll figure it out as time goes. And, you know, I know what I'm doing. I remember what I took. And then, like, you look back and you're like, I would have never had this level of detail. Like this, what I have now is nothing like what I had before. And it's super helpful. Sorry, NASCAR's blowing us up here. What's going on with this?
Let me see. Yeah, I checked FCUV. Just a calm and quiet 500%.
Yeah, I mean, he NASCAR always goes for the real sluggers. And you know, I was actually I put it in my notes. I haven't really done it yet, but I was gonna see if I could find any correlation on the real crazy stocks that, you know, can gain 1,000% in a day. And just see if there's anything I could correlate, but it would be its own full study to obviously do it. And I would put really small amounts in it, you know, until I saw something that was like really, really solid. But I know NASCAR loves to swing for the fences. So
yeah, these are, I saw also, you know, the short bear, the short bear, he's in the market wizard now. His name is Lucas, I think, from Germany. He has a YouTube channel, but it's the videos are old. But I watched one of them, one of his shorting strategies. It was really interesting the way he did it. He found like similar. It reminded me a little bit of this chart here, maybe not, but like just the pattern a bit, because he found the charts that were doing like a lot of reverse splits, and then he waited for a perfect time, you know, and then went into the filings to see if they were gonna pump the stock up and then offer shares, which happened multiple times throughout the history of the chart. And then he just shorted it at the right time, you know. That was one of the strategies he also talks about in book. But that was more similar, like, to companies like this, I think. Yeah. But it's just fascinating how many styles you can have that is successful.
yeah, no, I mean, there's so many little things that I could see work. It's just you really have to do the work to figure out it. And NASCAR, I'm curious, when you say you wake up at 4 a.m., are you able to trade at 4? As a retail investor, do you have a way of doing that? There's probably something that you can do where you can trade, where some manager allows you to, but I know mine, I can't touch anything until 8, even, you know, that's my pre-market open. Webull allows 4 a.m. trades. All right. So, yeah, I mean, in NASCAR, like, as I keep saying, dude, every day, pull up. You have to figure out something as how would you choose which stock to go into? And then, how often does it work? I mean, that's as simple as that. And, you know, based on how often it works, how much can you risk? You know, because if you go into something and, you know, you risk 50% of your account or something, and there's a chance it drops like hard on you, you can't ever take that risk. Especially, you know, with penny trades, you know, I've seen stuff in it. I'm like, wow, look at this penny trade. It's up 700%. And then I look, you know, a half hour later and it's back down to like up 100%. So it, like, literally anybody who bought there just got absolutely murdered. So you would have to do your research with that kind of high risk strategy.
Yeah.
You know, and the other thing too, NASCAR, if you hit one of those, like, let's say you had like just 10 grand in an account and all of a sudden you turn that 10 grand into 100, do you have the balls to do it again with 100? You know, it has to be scalable. You know, when you're looking at penny stocks and that kind of stuff, it has to be scalable up. Or you take the 100 and just, you know, kind of put that aside, and then once again go back down to 10 grand and try and turn that 10 grand. Just keep trying to turn a smaller sum into a larger amount. You know, I'm just curious on what your thought process would be to handle that kind of a trade. Because even me, I mean, I find my strategy is like super volatile and it's super high risk. But at the same time, it's nothing like this. I mean, I'm not, you know, I'm happy to get like 15% a day. That's cool. But 800% a day, that's a whole different kind of volatility.
One trade like this would be winning the investing championship.
Yes, that's my point. Like, don't get me wrong, it's something. It's there's some kind of strategy there. Obviously, people trade it.
He's saying big picture, there are always going to be outliers in the market where a stock turns 1000%, 2000%. Following those moves, almost always you will get 3 to 4 trading days of wild movers.
Right, and you know, I get what you're saying. It's just how do you play that move? Because I agree. I've seen stuff go up 5,000% in like 2 days, and I'm like, what? Like that is mind-boggling to me. But with my luck, I'd get like, you know, they would do a trading halt and it would drop and I'd get stuck or something dumb. You know, or Webull, right when I'm like about to sell, they're like, our account's down right now. We can't do anything. Just come back. But no, and like I said, I remember, I think it was Sober the other week or whatever. I was looking at it and I remember it had gone up a few times and I liked, you know, I had just a good feeling about it. And that day, if I would have traded it, it would have been like a 60% thing. But like, it's just, it was this penny stock, and you know, I don't have any kind of real, I just had a feeling that it looked good. But I can't go off that.
Also,
what's up?
No, I'm just checking the intraday, like the 1 minute chart here, to try to find like the patterns that we usually look for. It quickly just turns to a little bit of a nightmare, you know.
That's what I'm saying. Is like,
because
you know,
you can easily get stuck in some of these setups on the 1 minute. For example, here, and then it comes up here. You know, you take the trade and it just plummet down on you like 30%.
Right. That's what I'm saying. Is it doesn't. I mean, it bounces off your initial moving average there a few times, which maybe you could catch that, but.
If
yeah, the problem is just get into these names. If it immediately drops 5% on you, do you have the goal to stay in? You know, you
need a system, like a robust system there to, and maybe just stick to one trade per day or something like that. Because if you get trapped in some of these, you can get crushed. You know.
Yeah.
Also, the other way around, though, if you make it succeed, you will be a very happy person.
Yeah, NASCAR, and you say there's 6 or 7 of those outlier trades, but that means only 6 or 7 days of the entire year should you technically be doing that. It's kind of like a strategy. And how do you call them? I mean, how do you know one's, you know, one moves that much in a day? I have a hard time finding a way you correlate that to something that you can tangibly trade. I'm not saying you can't. I don't know. Maybe you. I mean, you're definitely more of an expert in this area than I am. I know you like to stick to these grand slams essentially. Oh, okay. So you're saying you start with you're letting one of those trades get the momentum market kind of going nuts, and then you just take advantage of the fact that everyone's like, all right, let's try and make big money. So you kind of follow the wave. Yeah, that's what I'm saying. I don't know. It's just you have to figure out how many stocks after one of those stocks make a huge move that you can get into. I mean, don't get me wrong. Every day I see stuff that's up over 100%, you know, and a couple 100% for that matter. But it's finding those names, and then for every one of them that's up that much, there's like 3 or 4 names that were up a ton that just plummeted during the day. So it's really, I feel like the odds work against you in those stocks. But then again, if you can hit a few, maybe it totally outperforms it.
I know you, Nashka. I know you use a lot of scans like pre-market to find some of these. But have you looked into like have you looked into like are these things moving like you just touched upon, like then the momentum gets in and a few other stocks are moving the same, you know, but have you like tried to build out to see if there's like some group correlation, or like if it's tied to something that you can easily spot, like which ones you should take? And then when you have found like this is an area I want to focus on, how would you, I know you said like 4 a.m. you go in, but how would you play like something like that even still on a regular basis? I'm curious to know. Like intraday, where would you get out if you manage to get successful on this one, for example? Where would you get out here? And
He said, I have a script that looks at the ask. If it's up 10% of the prior day's close, it's green. If it's between 10 and 25%, it's yellow. If it's 25%, it's red. He's like, I don't want to chase these. Yeah. So he has a way of eliminating picks. So hopefully it's just the few that like kind of started to move and he's catching them on the earlier side is my guess on what that means.
Yeah.
And that's the thing, is maybe that works. And maybe if on those weeks, like you're saying, there's like a big move, and then you usually have a few follow-through stocks that have a few huge moves. If you can correlate that to those, and somehow you can make it where if you hit one, I mean, honestly, if you hit one of those a year, you know, and the rest of the time you're not really trading, so you're not taking hits, it could work.
Yeah.
But you got to be unbelievably calculated.
But I'm still curious though, NASCAR, like how would you enter and exit like in a case like this? I guess it depends, but do you have some rules about how to stay and exit in a position? I
mean, you know, I can see something like Q does where like if you're trying to take a big position that outperforms like this, like on the FCUV, you know, once it breaks low of day, you know, you set like a stop somewhere in there and you try and buy as close to that low as you can. And then if it breaks through the low again, then you're out. So that way, you know what your risk is. But
yeah, I would be very stressed being in something like this. That's what I know.
It's definitely easier said than done.
It's easy to see it in hindsight. That's the thing though, in
real
time. Super complicated.
Yeah, we need predictive power, not retrospective hindsight.
Yeah.
I mean, don't get me wrong. It's important to study in hindsight. That's all you can do. But
you know, that I find like small patterns here that you can, if you look at this one 15-minute chart, obviously you draw like some stupid lines like this and you have the breakup, but that limit your, if you take it here, like if you take it to the max, it's only 34%, you know, it's still good, of course, but you would have to have a few of them. But that's why I'm asking you. I'm curious to know, because I have no idea how I would play this.
Not easily.
Yeah, Dane, what I struggle a little bit now with the QQQ also being like this, and my AI being red and all that stuff. When I do the scans, I struggle to find like a lot of setups from the same groups setting up strongly, you know. It's more random. It's like one stock from this group, one stock from this group, which I also think is a very negative sign in terms of things being bullish or not. It's still biotech and software that are the big things, but even there, you don't have a lot of stocks moving together and setting up together in groups. I think that's a sign that things are not doing really good now. Have you seen the same? Or
yeah, I mean, I see a lot of the same patterns. My market strength is like one thing I've just been focusing on, because for me, I keep honing in the way that I'm calculating everything, and like my ideas and understanding of what matters in the market strength, and how you can utilize that to kind of predict how the overall markets are doing. And as of now, I mean, it's ugly. There's barely anything working. A lot of stuff that's at the highs or at lows. There wasn't much volume that actually pushed through.
Yeah,
even though Friday it kind of bounced and then pulled back and then kind of held back up.
On the
And don't get me
classic.
wrong, there's a lot of volume on Friday, so it kind of seems bullish. And once again, I just saw on X, Trump posted that, he's got a deal going. So
I saw that in
Nope.
the news. Yeah.
no longer are we going to have a big war.
Yeah. No, but
I don't know how many times you can say that.
yeah, the market doesn't give a shit anymore, so he has used it up,
Yeah. And it
But
did work for a while. It was
It
pretty,
did work.
pretty wild.
I agreed. I was missing good volume on the classic breakout charts, right? They had very little volume, a lot of them.
Mhm.
On Thursday, and then Friday was a bit like predicted. I thought it would end more red, to be honest. So I'm a little bit curious to see where next week is taking us, because it did finish above the 9 EMA here, but it also bounced its head to 21 EMA, which it struggles to break properly through these again. So you just need more time here again, I think. But it was like a bit predictable on Friday, I think, that it would turn, because it looked good in the pre-market.
Right.
Nashkar was saying that, let's go back to, what was the ticker? FCUV. If you just look at technical analysis on these moves, you'll always find 10 different reasons to sell one of these parabolic runners. If it's chosen, though they don't care about technical analysis, they have a plan for these.
Yeah, NASCAR, I get what you're saying. Like, to be honest, if you're going to take one of these lotto things, like, yeah, get what you can. I mean, the rules in terms of selling out on one of these, it doesn't really matter so much. My question is getting in, staying in, how much you put on, that kind of thing.
Yeah, I saw him. So you're just like you have a little bit of a strategy on selling when something is up a certain amount. So and just secure the profits, which can happen quickly then, I guess. But yeah, that's also a bit of an issue. I don't know how important it is then, but 10 different reasons to sell on one of these. That's also what I'm seeing, So the way I've learned things and the way I'm focused now, like, obviously it's a different strategy, but that's what I'm asking. I'm trying to be curious to learn. Because in my strategy, if you have 10 reasons to sell, that it's going to be a bit too random for the way I do things. And do you check like some fundamentals on these? Like probably not when it's so small market cap, but you can still like. I assume you can try to spot like bullshit filings and stuff like that to maybe also short things that are being pumped up or something like that,
Mm-hmm.
Or like the short bear did with his he could easily spot when they were pumping something just to dilute the shareholders just a little bit later. So do you do anything like that, Nashkar? Do you check like filings and stuff? This is my list, Dane, for the week. I'm not planning to do anything, to be honest, but most of them are in software and biotech. I think NAVN looks pretty good, actually. It looks pretty promising, showing very good relative strength. Same with DDOG. HPE, I think it looks fantastic, but if it breaks out, it needs still volume for me. I think it needs some conviction behind a move, And then you have some healthcare stuff, OSCR Health, ALMS, if you zoom out a little bit, I like this big base. DELL still looks interesting to me. Lost a little bit of the relative strength in the last 2 weeks, but it's coming up again, hopefully. And then Fastly, seems like Fastly was performing a bit, but they have earnings soon, so I didn't want to do anything anyways. And then the last one is PanW. Looks, it went above all the moving averages on Friday, and it had a nice pullback, which is why I put it on the list. But these are my list, Dane, and if I have to select one or two from here, I think HPE and maybe Datadog looks good, but yeah.
Yeah, I mean, and to be honest, those are some of the names I keep seeing with some of the big investors in terms of what they are watching. So it's a good list, man.
Yeah.
But yeah, I mean, in terms of swing trading right now, I feel like I would be sitting on my hands, kind of like you were saying, because it's just really tough. Like nothing really seems to last through a few days.
No, that's the thing. I think you can nail an entry, and then the next day you will be stopped.
Yeah, I mean, don't get me wrong. Like it's probably good practice for when we're in a better market, but really tough to actually do anything with that right now. But I was just doing my screen real quick just to see what stocks would come up. What the hell happened with AAPL? That just popped up on me. They must have nailed some kind of.
Actually, they have earnings tomorrow, it says here.
Well, the stock jumped about 100%.
FDA panel vote on skin cancer treatment. Positive FDA panel vote. So that was it. But it had a massive drop before.
I know. That's what I'm saying. It's crazy that it would drop that much and then have good news coming out. Like maybe that was just people taking, knowing that news was going to come out, so they just de-risked and sold a ton off. I don't know.
Bit of a crazy chart overall when you zoom out.
Yeah, right.
So you were scanning for like those big movers?
No, that's my regular scan I check for. I mean, yeah, it's just high ADR stocks, over the course of a few months, but
yeah.
I hadn't seen that stock pop up on any of my lists ever before.
Yeah.
So who knows? I mean, it's probably not going to be something to even look at on Monday. It's just I just like to see weird stuff that's kind of going on things. Yeah, mine is a mix of the same stocks, that keep popping up. A couple biotechs, and then computer stuff.
I have to say, these two groups now are the only groups where you can find, or at least I can find, multiple charts that are setting up together.
Yeah.
I struggle to find those similar charts in other groups, and perhaps biotech right now are the strongest one of them all in terms of things holding up. At some point, I will assume that biotech can, and that entire field, I know it has already, but that it can benefit way more from AI than what it has already. So Nashkar was saying, yeah, it becomes fool's gold trying to catch these parabolic runners. Yeah, I'm largely a fool. I read. We are all here. You come to the right place.
Yeah.
I read the filings a lot more when I was focused on trading IPOs, looking at lockout periods, etc. But that game has largely died out. I see.
Yeah, IPOs. That was a real thing for a little bit there. Remember SPACs?
Yeah.
Like all
Nicola,
kinds
I was in. Is Nicola still alive? They are not, right? Oh my god.
I don't know.
I was in Nicola here, Dane. Believe it or not. Well, I don't know the price now because they have diluted the shit out of everyone, but I think I was in here somewhere.
Yeah, it's right before the old cup and handle there. That's a pretty solid cup and handle too.
Yeah, but it had nothing to do with patterns or analytical stuff or anything like that.
No, I know.
Yeah, I was just being stupid and lucky.
Well, isn't that what most of us hope for?
Look at this chart, though.
Yeah, it's wild. A wild chart.
That is a wild chart.
That's the stock market in a nutshell right there.
Yeah. That's 99.99% from the top to the bottom. Crazy.
You know, I still, you know, the one strategy that, you know, because you got me thinking about RK again, and the one strategy and the one thing that I know he used to really, really harp on is buying stuff when it's like bottoming out, but has insider buying.
Yeah.
And, you know, I go through like a few names like NotX and that, and you look at when the COO and the CFO started buying, and it's not like perfect, but it's so close that like, you know, you would just kill it on the timing on these things. Like the CEO and the CFO, they bought in like August of 2024.
Where another big fund also bought heaps of shares there because the ant showed up here.
That's what I'm saying. So like, I just wonder if you ever wanted to do a deep value, I would love to become, like, if I became full-time, I feel like I'd have like a few different things going, just to try different things. But I would love to do a value portfolio based on that. And obviously I have a bigger understanding of risk now. So I would, you know, put just stop losses in and stuff so I didn't get killed on these things. But it's just interesting to see how some of these work. I mean, I know NotX is a easy name to look at, so obviously I'd have to go through and see how many actually win on these versus how many go bankrupt. Because I'm sure there's a few that go bankrupt.
If you look at
you know,
NotX,
interestingly, you know, I think back on RK's thing, he never really talked about like stop losses or how he determines to get out of something.
No, he didn't do that.
You know, I would just be more interested on his technical side, what he did.
Yeah, and also like trimming, because you know he added to a position. He said multiple times that he tried to add on the way up and try to become better at that. So he did like pyramid into positions, but I don't know what he based it on or like when. I'm just assuming that he used the charts even more than he did on the streams.
Yeah. Well, he used the charts heavily on the streams. I remember when I first started watching him, I was interested because I'm just sorry reading NASCAR's comment. There's a new NASDAQ rule where tickers under 5 million value can be delisted as opposed to just 1 million. No, I did not know that, but I guess with the way things scale up, you know, 5 million is the new 1 million. So, yeah, they've been playing around with a lot of the rules. I noticed that in one of my accounts, that you used to have 25K in the account where you could like day trade it essentially, and now it's super low, whatever it is. Like the restriction they brought down to like, I don't even know. I think it's like $2,000 or something. It's like really low.
SpaceX is reporting in 2 days, it says here, Dane.
To the moon.
Talking about bending the rules, you know.
To the moon.
um,
That chart
I
looks
was
about
also-
exactly like what I pictured it looking like.
yeah, same.
Imagine they come
But-
out and they double revenues.
Yeah, it can drop away. Look at the market cap. It's an insane market cap still.
Yeah,
Yeah,
no, it really.
I'm still
Well, that's the
curious.
thing is there's. I would love to look at their filing and see how many outstanding shares there actually is versus what's in the market.
Yeah.
Because that number must be astronomical. Because what isn't it only 5% of the shares are available for shareholders?
That's what I have read. I even saw like the lockout period somewhere on X. I didn't
It's
see
early.
it.
It's like August or September that they can start to drop shares.
Yeah, but it was like very different periods for the different owners. So I don't know when everyone is out, but this one, there's no need to be in this one right now.
No, let this thing bottom out.
But Nashkar, I was going to ask you in terms of what you just said there with the deal listing and stuff, is how heavily do you look at market caps on your strategy? I assume you want to see a smaller market cap than a big one.
Yeah, I would imagine he's probably looking sub 20 mil, like really small stuff that can move quick. Oh yeah, the PDT rule, that's what it is.
Shorts have been getting crushed on some of these moves too. Yeah.
Yeah, I mean, no matter what, when you short something, even
Yeah.
against dumb retail was GME. So
But do you also check, like, do you have like a parameter you look for in also short interest in these stocks? Because I will assume that
oh, he's talking share counts that he looks for. He looks for low share counts, to get the explosive moves. I mean, obviously that makes sense. The lower the share
Yeah,
count, usually the bigger the move it can have.
yeah. Okay.
Yeah, I would be curious on your parabolic stuff that moves, what the typical share counts of these companies are.
Yeah.
Because I saw you had mentioned We2, and I looked at that one on Friday or Thursday, whatever day that moved. And yeah, it was Friday. And
Which
just
one day?
out of my own curiosity, obviously it's nothing I would ever trade, but
What's
you know,
the
it's
ticker again?
We2, WETO. But it's a $7 million market cap, super tiny, trading literally under 10 cents.
Yeah.
But I was looking at it because, one of my most common takes in terms of buying something is, that first time it bounces off the 10 MA for the day or EMA. And this was just a perfect example of it. I mean, if you would have bought around the 10 MA and held within, I don't know, how long, like a half hour, could have made 60%. But also there's a lot of people that bought somewhere in there and got screwed. So, but the volume is the one thing that gave me that makes me feel a little bit better about like a move like that, because it was like almost 1.5 billion shares moved. So I feel like if you can find a stock like that where it's that many shares are moving, your risk of like the typical like super big gap down is probably not there, but still, it's just crazy.
He's saying my thesis is WETO never goes at 4 a.m. like it did Friday without the move in CYCU.
So why are you saying it moved at 4 a.m.? I'm looking at the extended hour chart and it just skyrockets off the 4 a.m. chart. So you're saying CYCU went first, and that was on Thursday? Is that what that is? Is that a daily chart?
That was on Thursday, yeah.
Gotcha. So then you're saying that this is the next stock that follows that pattern. Interesting. Yeah, I'm not saying. I mean, maybe there's something to it, dude. I like to see everybody win at this game. Especially us who are out here risking. Which once again, on our stream, always like to point out this is one account of mine. I have multiple accounts. My other stuff is very safe, it's like in indexes and stuff. So I'm not risking my entire life savings here. So this is not financial advice, but yeah, I mean, it's just crazy what some of these like sub 10 million market caps can do. I mean, I know you're playing the lotto down here, but they're interesting case studies. I think it's interesting to review.
But you are saying something that I, you know, my English is not perfect here, but I was this is what I was curious about earlier when I asked about the groups, NASCAR, like, so it is connected to like momentum in other stocks and stuff like that. I see. But what are they doing? Like,
What do you mean?
I'm just reading about what the companies are doing.
Nothing.
I guess it doesn't matter.
Not much.
Yeah.
They're getting publicly traded around. That's about it. They're losing money. That's the one thing we can guarantee about most of these companies is they lose money.
Yeah.
But
or probably shit companies.
But yeah, what do you call it? I do got to get moving. It's went on a little longer. I gotta mow the yard. I have a jungle out in front.
Nice.
We had a huge storm on Wednesday. It poured so hard here. We had a lot of flooding in our area. It's kind of bad.
Oh, really?
But yeah, luckily I live somewhat on a hill, so I don't have to worry about it.
Yeah.
But yeah, it was like a tropical storm, and the way it like hovered over our area, it just like stuck here all day. So it just downpoured for like, I don't know, 10 hours or 12 hours.
That sucks.
Yeah, it's slightly worrying because the flooding issue is real. But but other than that, because of that, it was my yard's been soaked, so I haven't got the mow, and I was gonna mow earlier and never got a chance to. So I really got to get out there today.
Yeah.
But other than that, hopefully we can get a good week. I'm gonna stop saying that. I hope next week sucks. I'm gonna end on that. Because maybe I can get this around.
I hope everyone is having a terrible week next week, and then maybe things will turn around. But no, my plan.
Money is going to open up 5%.
my plan is also to do nothing unless things changes drastically. And we didn't, just before we go here, Dane, we saw Microsoft, right? But also Amazon had a gap up. Meta was down, gapping down, so it's not like all of them were performing well, you know, but there was a few good earnings reports here, which could be considered. Is this a catalyst for things changing a little bit? I don't know. Apple, like you said earlier, was down a bit, you know, so it is still a bit mixed. And then when you combine it with the QQQ in general, it does look a little bit rough still, and my plan is just like we need more confirmation about things, but you might get it this coming week. That it's nothing. I'm not saying it's not gonna happen at all, you know, but I have to wait and see until you get something.
Right. Yeah, we'll see. I'll tell you, every week never fails to surprise me. The whole Leopold thing this week was just wild.
Yeah, I would never imagine after reading about him on the way up that he would mess up something in that fashion. It's okay, like I guess it's never okay to lose money, but it's okay to do mistakes and stuff like that. But that just seems a bit naive.
I was like, I listened to Tim Dillon's podcast, and whenever he's basically talking shit about people, he always calls them a friend of the show, though, to make it just to be funny. And I think we should start saying, you know, that anytime someone blows up their account, that they're huge fans of our show.
A friend of the show. Okay.
Yeah.
Yeah.
Because then that way they can join our team.
Yeah. But yeah, thanks for the conversation on NASCAR. I always appreciate when you come in, because it's in the same fashion, you know, but very different from.
Hang on, hon.
what Dane and I are currently doing, and even Dane and I have very different styles right now. So it's always good to see more of the same stuff, you know.
Yeah. You know, I'm curious to see other people's strategies too. I like people that come in and, you know, regardless if I think it'll work or not, I think the interesting thing is, you know, I'm happy to also, like, you know, spitball ideas with people. It gives me ideas. It makes me think, like, you know, could you try this? Should you not try this? You know, regardless. So
Yeah.
everybody who comes in and has something else to bring to the table, I think it's cool to see.
Yeah, for sure. All right.
All right, everybody. Well,
We
I
will
hope you have a
see
good
you
week. Hey, I might as well just say this on here. I will not be able to stream next week.
Okay.
I'm going camping, so I will have no access.
Maybe I will jump on and do a solo, but I mean, if nothing happens, it's not really a point. So we wait and see then.
Yeah, I was almost gonna say, like, this week, because of the way it was going. Was thinking maybe not streaming because, like, it's like there's not much, but then everything happened and it's like, actually there's a decent amount to talk to, even though it's not a great week.
Yeah.
So
let's just see them. But okay, then we
all right, everybody.
see you then.
Everybody have a good one.
Bye bye.